This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hey, this is Joe. We're going to talk about trading today. We're going to talk about analysis today. I'm going to start with the analysis and then I'm going to go into the trading. There are two different components. And I think you want to understand this. But the most important thing in terms of like some of the videos that I do might seem repetitive, but I'm a big believer that repetition is the mother of skill. So you want to do trading. You want to do as many trades as you can do. The problem is what most people do is they do a lot of trades with a lot of money and then they blow up their account and then they don't have any money to trade with. So you need to actually use, I would suggest very, very small amounts when you start out. There's nothing wrong with using a simulated account. If you can't make money in a simulated account, you definitely should not be trading with real money. So you might want to start there. And then the other thing you could do with a simulated account is to go and if you have the time, if you have a couple hours a day, is go down to micro time frames and trade on a 2-minute chart with a 10-minute time frame. I wouldn't recommend doing that on a regular basis with real money. But I do think you can learn a ton by doing a lot of trades in a short period of time. I did probably 5,000 trades or something like that over the course of a year, 2 years in the S&P E-mini using tick charts way back about 20 years ago. And it just took me to a whole nother level. So I do think that you want to put on a decent amount of trades because, like I say, the phrase that I like to use is repetition is the mother of skill. And the way to get better at trading is to do a lot of trades. But you have to be really careful. If you put on a bunch of trades with a lot of money, you're going to blow up your account. And then you're going to have to either wait until you build up more money. And that gets frustrating because, your confidence goes down. And then every time you put on, you'll be building up scar tissue doing that. And every time you put on a new set of trades, you'll have more and more errors related to either hesitating or that type of thing. So these are pretty important concepts. I'm kind of just glazing over right now, but let's get into this example today. And I'm going to start again with the analysis, and then I want to go through my process after the trade is on. So the trade today, or the example today, is Nucor. And I don't know if you remember, if you go back a little while, I did mention Nucor when it was coming out of on the monthly chart. It was breaking the downtrend line and then it tested the 18-month and then it started to come off. And we had this nice reversal pattern with strong ADX on the weekly chart. So this was something I was bringing up in the high 50s, maybe 60, something like that. And it just took off like a rocket. Now, look at what's taken place. We're getting somewhat of the same type of pattern where we're getting this pullback on the weekly chart with very strong ADX. And then we have our opposing trend pattern develop on the lower time frame. And so let's just start with the weekly. Now, one thing I want to point out is that clearly there's some distance here between price and the monthly. So I know I can't really look to buy this and put it away for the next 6 months, year, anything like that. If I'm going to do something in this, it's got to be more trading oriented off the weekly and the daily with the daily trigger into the weekly. I can't really do a monthly and a weekly in this scenario because it's too far away. I can't expect this to make a whole nother leg up right now after the big run that it's had. So we want to keep that in mind. So now I know I'm looking at a weekly chart and I'm looking to get in using the daily. And I probably need to go back a little bit on the daily chart. So we'd be coming back to, as this is pulling back towards the 18-week. And we have strong ADX. We do have overrun on the MACD, but because this is such a powerful ADX pattern, as I say, I continue to watch this, and I'm going to watch what takes place on the lower time frame. Now, there's a few things that I want to focus in on the daily chart here. So I know I've got this pullback developing. Notice what took place right here. This is where price went into the zone between the 18 and the 40 and then came back out. Now, the reaction here is pretty important because we went to a new low. If you notice, we went to a new low right here. It took out this bottom by coming down here. But look at what happened right afterwards. We reversed on a dime. There wasn't any downside follow through. So I could almost argue that, you broke the downtrend line and then you rallied up. And then this is still considered to be somewhat of a test of this low. Because even though you went to a new low, it didn't have any follow through. It had one bar down and then immediately started to turn back to the upside. So in this situation, I probably would be looking as this comes back up through the 18. Now, there was earnings right here. So we actually would have been buying this after earnings on this kind of green day right here. Now, if you want to wait for the 40 to be taken out and close above, you'd be getting in around 99 and change. There's nothing wrong with that. However, in this situation, because it went to a new low, we had histogram MACD divergence. Notice also that even though red DI was above 25, ADX was not making any real charge up through or to 25. So we didn't have that much strength in the sell side. Not a lot of volume selling during this period either. See this decline here? Look at how light the volume was during that period. So these are all little things you want to kind of keep an eye on. And when I see that, I'd be willing to say, you know what, as this comes back up through the 18, especially with a big green bar, I think I'd be willing to do that. Now, if you wait for the close of the 40, sometimes you have to, it's almost like now you probably have to wait for a pullback because it's up so many days in a row. I'd kind of feel like I'm chasing a little bit. So that's part of the reason why I like using the 18 some of the time and buying it on this bar here. And then you can either use underneath the gap area. So we got a little gap here. We had this little hesitation area here. You could put a stop there, or you could just come underneath here. Either one would be fine using it with the 18. As I said, if you wait for the 40, then now I'd probably be looking for the first pullback to the 18 as my next kind of entry point. It might end up being a pinch play or something like that. But let's just look at this from this standpoint. So if I'm in here and I've got my stop here, now basically at 1-to-1, I'm looking at this as this rallies back up to this prior high, and that should be about equal to how much I risk. So if I buy at 97 and I'm risking down to 88, as we come back up to this prior high, I've about made what I risked. And at that point, I want to take some type of profit. And the beautiful thing about at least the way I think, when I'm putting a trade on and I do it, and I know I've got pretty good entry, and I know I've got my stop in place, and I know I have a really solid weekly chart underneath me, like I got a strong trend in place, then I have the confidence to see this trade through, especially if I can get it to that first target. Because if I can get it to the first target, I'm going to take a small profit, maybe a quarter of what I have, I'll take off, and then I'm going to go to a break even. At that point, I've done my job. I don't worry about this that much. This isn't actually a stock that I'm going to spend a whole lot of time obsessing over. And the reality is I don't really obsess over it between here and here either. I mean, I know I have my stop in place. I know that this is either going to work or it's not going to work. And if you sit there and watch every tick during the course of the day, every single movement, you're going to end up finding a reason to exit yourself out of the trade. And that's not the right mentality. The mentality is, I need to do 30 of these, 25 of these, even 20. I need to do as many of these type of trades that have all these conditions in place. And the balance of those trades is going to make me money. Over the course of 20 to 30 trades, I'm going to make money each time I do this. So can't think trade by trade. If I put this trade on here and I put a stop in place and I say, God, if this doesn't work, then I really don't know what I'm doing. That's not true. In fact, if you buy this here and it comes up and it ends up coming down and stopping you out, a lot of people will give up on this approach. They will say, you know what? Joe's full of crap. this doesn't work. It really doesn't work. And this is the reason why I really don't have a problem giving this out, because the vast majority of people won't continue to use this over time, because they'll have a couple of losses in a row, or they're put on one time and they'll lose and they'll just give up on it. So you need to find an approach that works for you. I'm not saying it's exactly like this. You could take major components of this and then make your own version of it. And then you have to really believe in it to the point where you'll see enough trades through to make it work. It's not about the analysis at this point. Getting better at trading is about execution, of honoring your stops. When you hit a target, you take a partial profit, go into a break even. And there are times when you'd go to a break even, get stopped out, and then you wouldn't see the stock continue to drop, and then later have a re-entry, a chance to get in again, and you have to take that re-entry. So these are all things that should be a part of your plan. I just think it was important to understand the mentality. If you're going to be successful trading, you have to have the mentality of, I'm trading 20 to 30 trades using a specific approach. And if one trade doesn't work, it doesn't mean I have to go looking for more analysis. Most people will learn something and then they'll try it out a couple times. And when it doesn't work, they go and have to study more. They'll say, oh, I need to learn more about this. I need to learn more about, or I have to go to a different indicator and try something else. And it's taking you down the wrong path. Trust me, I did it. It's the reason why I'm great at analysis, but it took me a very long time to learn how to trade because of it. And so I'm trying to teach you something to save you time, so you don't have to go through the 5 to 10 years that I did before I got really good at trading. So anyway, that's the idea here. Any comments or questions, please post them, and we'll see you next time.